Hey everyone, welcome to another edition of our Smart Investing weekly stock analysis, where we break down popular stocks that had some big news throughout the week or had some big movement during the week, and take a look and say, well, hey, is this a buying opportunity? Should we maybe look at selling this stock? Kind of give you the fundamental opinion and a value approach to that. And if you like the video, be sure to hit that subscribe button below to get those future weekly stock analysis videos as well. But today, talking about movements, let's talk about Bed Bath and Beyond. Huge fall this week in a stock price. I took a look here on the chart. 1 week down nearly 30% just on the week for Bed Bath and Beyond.
This is one of those hot meme stocks. I think they did go up to almost $50 a share, and I was kind of surprised they fell into that. But it was based on the shorting, I guess. They were looking for a short squeeze. But it seems like the meme stocks, or the meme people, I guess I'll call them, they're kind of getting squeezed right now because it's not going the way they want it to go.
Yeah, I mean, it's definitely fallen substantially, and I was shocked. I mean, this is one that was actually trading at about $3 a share during COVID. I mean, it fell dramatically. So we went from 3 to over 50. Now I think I want to say it's around $16 a share. We'll take a look and get you the exact numbers on that current price. But it did fall mainly on news from their quarter. They reported earnings, reported sales, largely that missed expectations, and some reasons for the miss and kind of the miss from what management was saying was they blamed the Delta variant. I don't know if this is kind of a cop out, but they said that this could hurt foot traffic going forward in main states like Texas, Florida, and California, and also too. No surprise here. This is across all businesses, but said that the supply constraints is making it hard on margins for the business as well.
Yeah, I think their stores are having a problem. You really got to look if you're going to invest in this company, depending on what the fundamentals we come out with, to really look at how's their online business doing. They're growing that. So a lot of different things to look at, but this could be, I mean, with this big pullback, you said about 30%, maybe time to step in and start buying it. Let's take a look at the numbers.
Yeah, and I do think actually on Thursday they were down more than 25%. So majority of that that down week came from just one day. Today I think they finished down 4% as well. So definitely a rough week for Bed Bath and Beyond. But as I said, let's take a look at the numbers. As always, that's the important part when you're considering the investment. So got this pulled up here, and exciting for our viewers. You might be saying this is a different type of look. And it is. We are actually using a new software here. So got some new exciting numbers for our viewers.
Yeah. So let's go and get started here. And one thing I like about the new system here is it does show the industry they compete in. Specialty retail. Kind of surprised on that, I guess, because maybe they're not clothing and so forth, but that's the industry they compete in. So when you look at these numbers by the industry, that's who you're competing with. Short percent of float, they do have about 45% short shares. Again, that could be what caused the meme stock to happen. And then we do see the institutional ownership, 105.5%, because of the short that are out there, how that actually works out. So, but a lot of institutional ownership, no matter how you kind of look at that. Let's take a look at the numbers here on the valuation ratios. We do see the PE ratio is 23 versus 36. So the whole industry is pretty high. I'm not really great when I see it 23 times PE, but still better than the industry. Price of sales looking very good, though, 0.2 versus 1.1. You got a nice price to tangible book value. Actually, the same. Looks like they have no intangible assets because they're the same as the price to book, but 1.6. And look at that industry at 89.2 on the price to tangible book value. Whoo, makes our Bed Bath & Beyond look pretty good. Producing price to cash flow also looking good, 3.1 versus 12.3. And then PEG forward, or PEG ratio, which is a price earnings divided by growth over the next 5 years. We do see 0.1 for Bed Bath & Beyond versus 2. So right now, it could be because of the pullback. This is looking fairly attractive so far. Let's take a look at their earnings here. We don't see any earnings year over year change. The industry was up 38%. You can see that 5-year change. Wow, earnings down 31.8% for Bed Bath & Beyond. Industry did see a gain about 11.9%. Look at the sales 1 year, year over year. And I'm assuming it's including everything, online, walk, and everything, only 0.2%. But now I kind of slide to the right, see the industry. Well, the industry is negative 1.9. So I guess Bed Bath & Beyond doing 0.2% growth is pretty good over that 1 year. But the 4 year for Bed Bath not doing a negative 4%. versus a positive 0.6% for the industry. Look at the dividends. They do not pay a dividend, unfortunately, so no reason to kind of spend more time on that. Let's look at the strength of the company by the balance sheet. We do see here we got a current ratio, which shows the capability to kind of pay off their short-term liabilities or short-term assets, 1.6 versus 2.3. You do want this higher, but I'm okay with a 1.6% debt to equity. Now, here's a big problem. Debt to equity, 280% versus the industry at 360%. So you've got a high debt company, high debt industry. I don't like that. I don't care that the industry is higher than the company. 280% for me, that's almost a no deal right there. But some people may still like it. We can look at other things too. We can look at the, what it's going to look at here, the inventory, 48.8%, 47.2% is the industry. That's okay. We do see a net profit margin. They do make a profit at Bed Bath & Beyond of only 1%. That's below the industry at 4%. Return on equity, 9.1 versus 56.3. And then we do see a return on invested capital, which is 4.2 versus 16. So not looking too good on the numbers here. I know you're going to take a look at the earnings going forward, Chase, and some other things, but I think that debt is really going to kind of shy me away from putting any money into Bed Bath & Beyond.
Yeah, and one thing I do want to bring up is, one reason that debt could be so high is the stock buybacks. This company bought back a lot of stock over the years, and I think it's kind of unwisely buying back stock, clearly, as they were putting money into stock buybacks, but the stock price continued to fall. So as that stock price continued to fall, clearly was not a good use of capital, as they were buying the stock at higher prices. The reason that's looking the debt to equity look troublesome is, well, they've taken cash, they've reduced the shares outstanding, but now that actually makes the balance sheet look a little bit weaker because it reduces the equity. So debt could have actually maintained itself depending on how much equity has fallen. So I want to take a closer look, but I do think you are right. 280%, that's, I'm going to say, a no-fly zone for myself. I don't care what the excuse is.
And also too, Chase, I'm glad you brought that up, because again, when we give these numbers to people, it's not the end of the research. It's the start of your research to really understand more in depth about these numbers, because it could be, maybe they don't have much debt and maybe their equity is so low, but I still can agree with them buying stock, especially at higher prices. But again, this is trying to point the investors in the right direction of where to look.
Yeah. And with that, let's take a look here at the current price for Bed Bath & Beyond, $16.58. You can see, as we mentioned, the 52-week high, as I think it kind of got wrapped up in that meme hype of, oh, just buy anything that's being shorted. Doesn't care what the business is. You just buy it because there's a lot of short position. We're going to short squeeze it. You can see, gosh, it went all the way up to $53.90. 52-week low currently $15.70. So it's, of course, closer to that 52-week low and well off that 52-week high. And I will say, I hope Bed Bath & Beyond was not buying back stock when it was near $53 a share. That'd be a terrible, terrible use of capital. Now, as always, let's take a look at what this company looks like in terms of earnings as we move forward. I go up to February 2023. I do see estimated earnings per share of $1.72. I mean, that does give us an attractive target sell price of $28.55. You can see here too, it trades at a forward PE that's very attractive at 9.63. But one thing that I will point out for our viewers, you can see here the number of analysts, 20. But look at the low estimate is $1.20. And the high estimate is $2.70. That's a huge range. I mean, the high is more than double the low at this point. I don't know if I feel comfortable with these numbers. I mean, I said the valuations are very, very strong for the company, but I don't know if I like it. I think it could be a big value trap. And the other thing I point out here too is it seems like it's been in a turnaround for, I don't know, 6 years now.
Let's say years. Yeah. They're always turning things around. And Chase, the other thing too, we can see on those earnings estimates, because I think we said Thursday the stock was down. Next week we could see lower earnings, bringing that down. But that variance from, I think it was $1.20 to $2.70. That's just too large. That means the analysts, and even though there's 20 of them, they can't really agree on that. I like to have a tighter number with, gosh, a range of maybe 10, 15, 20% at most. But gosh, that's about 100% different from 120 to 270.
Yeah. And I'm sorry, if this company couldn't get the turnaround going now with everything that's happened with, people buying homes and updating their homes during COVID.
Yeah.
I just don't know when this company is going to be able to actually implement a turnaround. I think this is a business that I just don't know if it's kept up with the times, unfortunately. And I think new competitors have definitely taken share, and I don't know if they're going to be able to win back that share.
Yeah, and I used to like going to Bed Bath and Beyond years ago. It was cool stuff in there. They had different things. It's kind of a fun place to go, but they just haven't excited people to go in there as much as they used to. Maybe their R&D is not doing very good or something. But and this could be a value trap as well, Chase, because it looks pretty good, but we just don't see the catalyst to turn this around. And we're not doing the deep research. Again, before we buy anything, it's 10, 20 hours of research. We've only done a few minutes here trying to see if it's worth the research. I don't know. I don't think it is, but somebody might find some gold.
I mean, I will say, if the company does implement a turnaround, they do actually come in and increase earnings. They get sales going back. I mean, this stock easily could double. I think I'm not afraid to say that this stock could do very, very well. My thing is, I don't see that turnaround taking place, because the big thing that, as I said, is if you couldn't do it when there's all this hype around homes and you're kind of a home furnishing retailer, not home furnishing, but home-based retailer, I don't feel comfortable with it. I don't know enough about the CEO and management team, but it seems like they've had turnover there in terms of their management team. And it seems like they're in a turnaround every single year almost, where it's like, this is going to be the time we're going to get this ship going in the right direction. And I think since online kind of became more prevalent, I just don't think they were able to keep up with the times.
Yeah, I'm hoping a lot of people sold it at 53, because you hold it now, you're probably not that happy. So.
Probably not. So anyways, with that, thank you for viewing our Smart Investing Weekly Stock Analysis today. This is for informational purposes only and should not be used as investment advice. But again, if you found the video useful and you enjoyed the analysis that we went through today, please be sure to hit that subscribe button below. And also, too, if you're interested in learning more about our investment firm here, Wilsey Asset Management, go to our website, smartinvesting2000.com. Again, that's smartinvesting2000.com. Talk to you next week.
All righty.